Jesse Livermore once said, "The market is never wrong. Opinions are." And right now? A lot of people have very strong opinions about Bitcoin. Half of them think it's going to $250,000. The other half think it's a Ponzi scheme dressed in a hoodie. Both sides are acting like they know. Nobody knows. But here's what we do know. Bitcoin just did something it has only done 3 times in its entire 16-year history. And the last 2 times it did this? One group of people got embarrassingly rich. The other group rage sold at the bottom and swore off crypto forever. So before you do anything with your portfolio, watch this video. Let me take you back to 2013. Bitcoin was a weird internet toy for libertarians and people who hated banks. It ran from $13 to $1,100 in a single year. Then it crashed 85%. Everyone said it was dead. Then 2017 happened. It went from $1,000 to $20,000. Then crashed 84% again. It's dead. Again. Then 2020. Pandemic money printer goes BRRR. The Fed dumps $4.8 trillion into the economy in 18 months. Bitcoin goes from $4,000 to $69,000. 84% crash. Again. Are you seeing the pattern? Here's what Bitcoin actually is, historically speaking. It's not a currency. It's not digital gold yet. Right now, Bitcoin is the world's largest behavioral psychology experiment. Every 4 years, something called the halving happens. The amount of new Bitcoin entering circulation gets cut in half. Basic supply and demand. Less supply, same or growing demand, price goes up. This isn't theory. This has happened with clockwork consistency for 16 years. The last halving? April 2024. We are right in the middle of the window where, historically, Bitcoin makes its most violent, irrational, jaw-dropping move. So why does it feel so confusing right now? Because this cycle has a villain. Here's where it gets weird. For the first time in Bitcoin's history, it is being traded like a macro asset. Not like internet money. Like a stock. Like a bond. Like oil. In 2025, Bitcoin's 60-day correlation with the Nasdaq hit 0.72. That means when tech stocks sneeze, Bitcoin catches a cold. That has never been this high for this long. Why does that matter? Because Bitcoin was supposed to be the escape hatch. The "I don't trust the system" trade. But now BlackRock, Fidelity, and 11 other institutions are holding it in ETFs. As of Q1 2026, Bitcoin ETFs have accumulated over 1.1 million BTC. That's roughly 5.5% of the entire supply that will ever exist. Sitting in Wall Street products. On one hand, incredible institutional legitimacy. Billions flowing in. On the other hand, when hedge funds need to meet margin calls in a stock market panic, they sell what's liquid. And Bitcoin, with $30 to $50 billion in daily volume, is very liquid. So now you have this bizarre situation. Bitcoin is being adopted as a store of value at the same time it's being used as a risk-off piggy bank to smash open during emergencies. It's like buying a fireproof safe. And then keeping it next to the fireplace. And then there's the elephant in the room. U.S. national debt just crossed $36.2 trillion. The Fed is trapped. Raise rates too high, economy cracks. Cut rates too fast, inflation roars back. That uncertainty has sent Bitcoin swinging $10,000 in either direction on single macro data releases. CPI comes in hot? Bitcoin dumps 8% in an hour. Fed hints at cuts? Bitcoin pumps 12% before lunch. This is not normal asset behavior. This is a teenager who just discovered espresso. So what does this mean for you, sitting here right now? Here's the honest picture. The on-chain data is constructive. Long-term holders, wallets that haven't moved Bitcoin in over a year, are sitting on 73% of the total supply. These are not panicked people. These are convicted people. Meanwhile, exchange reserves, the Bitcoin sitting on Coinbase, Binance, Kraken, ready to be sold, are at their lowest level since 2017. When supply is locked up and demand shows up, you already know what happens. But here's the tension. Macroeconomics has never been this uncertain at this stage of a Bitcoin cycle. In 2020, the Fed was printing money with both hands. Tailwind. Right now, the Fed is data dependent, which is finance speak for we genuinely have no idea what we're doing. Tariff uncertainty. A potential US recession. Geopolitical chaos on 3 continents. These are headwinds that didn't exist in prior cycles. Here's the historical target people are modeling. If Bitcoin follows even a compressed version of prior post-halving cycles, a 4x from the halving price of $65,000 puts a cycle top somewhere around $200,000 to $250,000. But here's the number they don't put in the thumbnail. The average drawdown during the bull run before the final top has been 35% to 45%. Meaning you might be right about the destination and still get shaken out 3 times on the way there. Bitcoin dropped 31% in 2 weeks. Everyone called it the end. It then went up 175% from that end. The game isn't predicting the top. The game is surviving the volatility long enough to be there when it matters. Look, I'm not here to tell you Bitcoin is going to $500,000. I'm not here to tell you it's going to zero. Anyone who tells you they know for certain is either lying to you or lying to themselves. What history does tell us is this. Every single time Bitcoin has been declared dead. And I mean every single time. It came back and hit a new all-time high. But the people who made money? They weren't the ones who went all in on hype. They were the ones who sized their position so that a 50% crash wouldn't destroy their life. They were the ones who had a plan before the volatility hit. As Sir John Templeton put it, the time of maximum pessimism is the best time to buy. We're not at maximum pessimism. We're at maximum confusion. And confusion, historically, is where the real opportunities hide. For the people who did their homework. So do your homework. Size your risk. And for the love of everything, stop checking the price every 4 minutes. That's the video. If this helped you think more clearly, share it with one person who needs to hear it. I'll see you in the next one.